we certainly recognize not only the SME, even all the businesses, enterprises had an impact on that interest rates. There's no question about that. That's obviously the purpose of tightening monetary policy. Preventing a crash is to basically control the demand. So that's the only instrument we have. So that's how economy came to this kind of stability as a result of this action. Obviously, there are effects of that to the whole country, not only SME but everyone else. With the inflation, poor people, everyone had an impact on. Still, cost of living is not, income was not up to that level. So everyone. So then, what are the instruments that central bank has to target specific kind of a sector of overall economy? So we had in the past, under the early act, there was a provision under the early act. We have what they call credit lines, administrative credit lines. Central bank also had a provision to provide target SMEs, women, all this, getting funding from somewhere, ADB, World Bank, and we administer, even from central bank funding, we had this facility. We were doing that in the past. That's why people's expectations still, central bank can do something on the sectoral credit. But right now, with the new banking, Central Bank Act, is basically looking after sectoral, tourism sector or the housing sector or SME sector. I don't think central bank from the monetary policy, there's no instrument at all. We are using interest rates for the whole economy, irrespective of the SME or everyone. That's the first principle. Secondly, the banking sector. Our mandate for the banking sector is to maintain a secure financial stability on behalf of the depositors, protect the depositors and maintain financial stability. So while maintaining financial stability, obviously we had that kind of period. Banking sector was under severe stress and almost touch and go banking crisis. That's why, if you all can remember, the concern of the domestic debt restructuring of the banking sector would have collapsed the banking sector. So that we prevented that. I mean, this is a recommendation also. We recommend don't touch banking sector, because there could be a collapse. End of the story, it will waste everything. So then now our mandate is for us to secure banking sector stability, maintain stability, and financial intermediary, even for SMEs others, is essential. Good banking sector is in the country. So then, obviously, we as much as possible, we have been asking banks, even for their interests, people who have found difficulty during the crisis, and give them as much as possible the relief, restructure, extend their loans to the extent that they can recover. So they are recovering the depositors' money. They have a responsibility to protect depositors' money. That's how. That's their mandate. So as a result, we had several. One is Sunday attack. There's a tourism sector long moratorium. Then up to 2023, there's another moratorium extended. All I can say, all the moratoriums, there's no single cent came from the taxpayer government to provide those relief. All the cost of this moratoriums, interest adjustments, came on the depositors' interest. So who paid that? Who paid for the relief that was provided for 2019 to up to now, restructuring debt obligation, adjusting interest rates, were borne by the depositor, the pensioners, everyone. That's how people are now still complaining interest rates are not sufficient for their savings. So we have a mandate.
You said that was taken by the depositor, but the moratorium, the borrower is the one who paid for it. No, he had extended.
Borrower paid at a low interest rates. That low interest rate was charged from the depositor.
No, but there's accumulative interest also. No? The borrower is still paying.
Yeah, you see, the question is here, when the interest rates are going up, banks are paying 25% up to for fixed deposits for the savers. Inflation was 70. They were getting only 25%. So once banks has already paid the interest, now bank can't go and ask. So we paid the interest. Can't you give it back, or can't you make a low interest for them to give a benefit to borrowers?
But Governor, that's in the bottom line already. That period, the banks The bottom line has doubled now during this period.
No, I mean, if you look at 2023, obvious 2020, both those 2 years, in fact, there's a concern one of the bigger banks will report a loss in quarterly basis. If there's a bigger bank reported loss in quarterly basis, that will erode the confidence of the bank. People will start withdrawing money.
That was owing to the apportionment, because they
Sorry?
were looking at a foreign exchange hit. That was 2 banks on apportionment, not on profitability, not on the bottom line.
No, I mean, I think
That
we can't share, these are some market sensitive information. We know as a regulator how critical and how crucial some of the banks were trying their best to report at least a small profit. Because if there's any bank quarterly basis reported a loss, that will trigger a lot of other things for their corresponding bank and all the other activities. That will trigger a confusion of the system. So this whole argument is banks are making a lot of money. That is basically what you see when you look at the gross numbers. But you look at the return on equity of investment in the bank, is average 13%, even historically came down to 10 to 11% during the crisis period, now recovering back to 13% now. So when you have the risk-free investment on treasury government securities giving 5 to year 11%, return on equity of a risky business, even in a bank, is around 12-13. I think if you comparable basis, this is obviously you can look at the gross numbers, we can see huge profits in billions because business is bigger. So this is not what need to compare. I mean, this is whole idea. I mean, we have all sympathy for the people who have been affected during the crisis, not only SMEs, everyone. So our instruments, we can do best to bring down the interest. Now market rates are calmed down. So for the past, if there's any concession, obviously there are several ways that they can be provided support. That has to come from the relevant authority. For example, if the government is willing to say interest subsidy, for example, senior citizens 15% was given, then market rates were 8, the gap was provided by the government. That's a subsidy.
That really is the issue. That is, the government will have to sort of it is very clear that the monetary policy board, I'm assuming you're speaking as the chairman of the monetary policy board, the governing board, right? Your board is saying, look, there's nothing we can do about this. We are unable to sort of pick SME or hotel or something else.
No, we are trying our best to at least ask banks to give them to the maximum, because that is good for the banks. So if people are asking, no point of banks having large amount of stage 3 loans. I mean, if you look at numbers, NPLs actually peaked last year. Now it is gradually settling down. So this situation is now easing compared to where they were earlier. But you see here, the point is that I don't think we are asking them. That's why we even issue circular within the provisions of the law. We are given them. But if we can't give interest rate directions, please give them cut this interest, cut this issue in the loans at this rate. Then someone will have to finance that.
I'm looking at today's Financial Times headlines. Let me just read the first para. The economy's backbone, the SME, this week renewed their serious concerns and lack of effective support for their viability impacted by successive crises and policy missteps. What they are saying is that, nothing they seem to have got. Now, a directive that there is, and I got a copy of that, is if your loans are less than 25 million rupees, you get a 12-month period to come up with a restructure, 25 to 59 months, and if it is over 50 million rupees, 6 months. I mean, is that working? But what the Honorable Minister said is it is impossible for them to sort of come up with a restructuring plan. What really is going on? Because your monetary policy, their fiscal policy, we are oversight.
No, I think even this circular, Chairman, if you look at, I have thankful for the government. This time, there's a good consultative process. So we had discussion on the same table, SMEs, Bankers Association, our regulator, Director of Bank Supervision, and also the Finance Ministry. and I think this minister was also involved there. So with the consultation, this is what all parties agreed, the feasible solution. From our side, this is solution. From their side, this is what they asked. On that basis, because it's not, we can't impose anything, because banks have agreed to provide this 12 months, 6 months, because the understanding was that below 25 million stage 3 loans, 99% are below 25 million that, in that bracket. That's why it was given a 12 months period in consultation with the banks. So we agreed and we issued the circular on the basis of agreement. I think that is where we had done the maximum what is possible, also taking care of balancing the interests of the banks.
No, I think, Governor, this conversation clarifies a very good place where the SME sector can also now know that the central bank has a limited ability to do anything about it. So that's out of the way. And then we have to collectively see how do we use the funds or the concessions given by the government, whether the banks are openly willing to renegotiate this. I think that is, you have already given a place to inquire as well.
Yeah,
right?
exactly.
So we will also push that, but the thing is the reluctance is still there.
No,
so
we will certainly pushing banks.
Yeah.
Based on circular, we will be pushing them.
So we'll collectively work together to get this.
And one thing I would like to add here from the government side, and one supportive action is to activate this credit guarantee scheme, where there's a guarantee by someone, by the guarantee institution, so that banks can at least go little beyond what they can go, because there's someone guaranteeing the obligation.
I think